Hey everyone! Ever dreamed of turning $10,000 into $25,000 without breaking a sweat? Well, that's exactly what long-term investing can do for you. Over the past decade, the S&P 500 has delivered a jaw-dropping 173% return. That means, if you'd invested 10 years ago, you'd have nearly tripled your money today. But here's the kicker. Some savvy investors have done even better. We're talking about returns of 250%, 300%, or even more. How? By tapping into the power of investment companies. These often overlooked gems can supercharge your portfolio. And today, we're diving deep into why they might just be your ticket to financial freedom. So buckle up, because we're about to embark on a journey that could transform your investing strategy. Now, let's break down what investment companies actually are. Think of them as financial supermarkets. Instead of buying groceries, you're buying stakes in multiple businesses all at once. These companies pool money from investors like you and me, then use that cash to invest in a wide range of assets. We're talking stocks, bonds, real estate, and sometimes even private companies that aren't listed on any stock exchange. The beauty of this setup? You get instant diversification without having to do all the legwork yourself. It's like having a team of financial experts working around the clock to grow your wealth. One prime example is Berkshire Hathaway, run by the legendary Warren Buffett. With a single share, you're tapping into the performance of household names like Apple, Bank of America, and Coca-Cola, plus a bunch of wholly owned businesses. But Berkshire's just the tip of the iceberg. There are hundreds of these investment powerhouses out there, each with its own unique strategy and focus. Some specialize in specific sectors like healthcare or tech, while others cast a wider net. The key takeaway? These companies offer a shortcut to building a robust, diversified portfolio that can weather market storms and potentially deliver impressive returns over the long haul. Let's get down to brass tacks and compare the S&P 500 with some individual heavy hitters. Over the last decade, the S&P 500 has been on a tear, racking up gains of about 173%. Not too shabby, right? But here's where things get interesting. Some individual stocks have left even that impressive performance in the dust. Take Amazon, Microsoft, or Nvidia, for example. These tech titans have delivered returns that would make your head spin, some even crossing into four-digit territory. Now, you might be thinking, why not just load up on these winners? Well, not so fast. While the rewards can be massive, so can the risks. Remember, for every Amazon, there's a company that didn't make it. That's why diversification is key. But here's a thought. What if you could get the best of both worlds? Enter investment companies. Take Berkshire Hathaway, for instance. It's outperformed the S&P 500 by about 60% over the same period. That's like getting an extra scoop of ice cream on an already delicious sundae. And get this, there are other investment companies out there that have done even better. We're talking about returns that are 50%, 100%, or even more above what Berkshire achieved. It's like they've found a way to have their cake and eat it too, delivering potentially higher returns while spreading out the risk. Now, I'm not saying these companies are guaranteed to beat the market in the future, but their track record certainly makes them worth a closer look. It just goes to show that sometimes thinking outside the box of traditional index investing can really pay off. Now, let's talk about a game changer that's been flying under the radar: private equity ETFs. These are relatively new kids on the block, but they're making waves in the investment world. So, what's the big deal? Well, private equity has long been the playground of the ultra-wealthy and institutional investors. It's where the big boys invest in companies that aren't listed on public stock exchanges. Traditionally, US regular folks couldn't get a piece of this action. But that's all changing with private equity ETFs. These funds are like your all-access pass to the world of private equity. They invest in a basket of private equity firms, giving you exposure to their potential high returns without needing millions in your bank account. And let me tell you, some of these ETFs have been crushing it. We're seeing performances that are making traditional stock market returns look like small potatoes. But here's the kicker. Because they're relatively new and still not widely known, there's a chance you could be getting in on the ground floor of something big. Now, don't get me wrong. These aren't risk-free investments. Private equity can be volatile and less transparent than public markets. But for those looking to add some rocket fuel to their portfolio and tap into opportunities previously reserved for the 1%, private equity ETFs could be worth a look. It's like you're getting a VIP pass to an exclusive investment club, all wrapped up in an easy-to-buy ETF. As always, do your homework, but this could be an exciting way to diversify your portfolio and potentially boost your returns. Let's talk about the elephant in the room, or should I say, the Oracle of Omaha's brainchild, Berkshire Hathaway. This isn't just a stock. It's like buying a slice of the American economy. When you invest in Berkshire, you're not just getting one company. You're getting a smorgasbord of blue-chip stocks and wholly owned businesses. It's like a buffet where Warren Buffett himself is the chef. Now, let's peek under the hood. Berkshire's portfolio is a who's who of corporate America. We're talking Apple, Bank of America, Coca-Cola, and dozens more. But here's where it gets really interesting. While these publicly traded stocks make up a big chunk of Berkshire's value, they're not the whole story. Buffett and his team have also gobbled up entire companies across various sectors. We're talking insurance, energy, railroads, you name it. It's like having your fingers in every pie at the bakery. Now, some folks might raise an eyebrow at Berkshire's heavy tech weighting, with Apple making up over 40% of its public stock portfolio. That's a valid concern. It's a lot of eggs in one basket. But remember, this is just part of the picture. When you factor in all of Berkshire's privately held businesses, that Apple stake shrinks to around 20% of the overall pie. Still significant, but not as overwhelming as it first appears. Here's the kicker. Over the past decade, Berkshire has outperformed the S&P 500 by about 60%. That's like getting a 60% bonus on top of already solid market returns. And all this comes wrapped up in a single stock. It's like the Swiss Army knife of investments, versatile, reliable, and packing a punch. Now, I'm not saying Berkshire is perfect, or that it'll always outperform. But for investors looking for diversification without the hassle of managing a complex portfolio, it's certainly food for thought. It's a testament to the power of investment companies and how they can simplify your investing journey while potentially juicing your returns. Now, let's dive into the real treasure trove. Lesser-known investment companies that could be absolute game changers for your portfolio. While everyone's talking about Berkshire Hathaway, there are hidden gems out there that have been quietly outperforming even Warren Buffett's behemoth. I'm talking about companies that have delivered returns 50%, 100%, or even more above Berkshire's impressive performance. It's like finding a shortcut to the top of the mountain that nobody else knows about. Take the 3i Group, for example. This British investment company has been on an absolute tear, with its stock price skyrocketing over the past few years. And here's the kicker. A lot of their investments are in private companies that you can't access through the stock market. It's like getting a backstage pass to the most exclusive investment opportunities. But here's where it gets really interesting. Many of these investment companies are currently trading at a significant discount to their net asset value. In plain English, that means you're essentially buying a dollar's worth of assets for 50 cents or less. It's like walking into a store where everything is perpetually on sale. Now, You might be wondering why these amazing opportunities are flying under the radar. Well, many of them are smaller companies, some focusing on specific regions or sectors. This means they often don't get the same attention as the big players. But for savvy investors, this lack of attention spells opportunity. It's like being the only one who knows about a gold mine in your backyard. Of course, with potentially higher rewards come higher risks. These companies can be more volatile, and it might take some time for the market to recognize their true value. But for patient investors willing to do their homework, these hidden gems could be the rocket fuel your portfolio needs. It's like planting seeds that could grow into mighty oaks. Just remember, thorough research is key. We're not just throwing darts at a board here, we're looking for well-managed companies with a track record of smart investments and shareholder-friendly policies. So, while everyone else is fighting over the same old stocks, you could be uncovering the next big winner that nobody's talking about yet. Let's zoom out and look at the bigger picture, the global investment company landscape. We're not just talking about American companies here, there's a whole world of opportunity out there. From European powerhouses to Asian tigers, global investment companies offer a passport to international markets without the hassle of navigating foreign stock exchanges. Think about it. With a single purchase, you could gain exposure to high-growth markets in India, cutting-edge tech in Japan, or robust industries in Germany. It's like having a world tour for your money. Many of these global players have deep local knowledge and connections in their home markets, giving them an edge that's hard to replicate. And here's the exciting part. Some of these companies are trading at significant discounts to their net asset value. It's like getting a round-the-world ticket at economy prices, but flying first class. Now, investing globally does come with its own set of challenges. You've got to consider things like currency fluctuations, geopolitical risks, and different regulatory environments. But for those willing to embrace a global perspective, the potential rewards can be substantial. It's about casting a wider net to catch bigger fish. So, as you're building your investment strategy, don't forget to look beyond your borders. The next big opportunity might be halfway around the world. And who knows? Your portfolio's next superstar could be a company you've never heard of, in a country you've never visited. Now, I'm curious, what's your take on global investing? Have you considered adding international investment companies to your portfolio? If you found this insight valuable, don't forget to hit that like button and subscribe for more game-changing investment strategies. Your financial future might thank you for it.